Good afternoon, everybody. Today I'm chatting with Martin Turenne from FPX Nickel. In this interview, I ask Martin for his thesis on why he's bullish about nickel. I also ask him what retail investors should think about when investing in nickel juniors, and I think he gives a very actionable response that if you are interested in potentially rolling the dice on some nickel names, probably some good stuff to think about there. Also, we get into his company, FPX Nickel, which is this different type of nickel mineralization that for the most part, nobody's really seen or heard of, and they're the first ones trying to do it at scale. So I think it's largely flown under the radar because nobody's really seen this type of deposit. In addition to that, we get into how the company just recently signed an MOU with a joint venture between Toyota and Panasonic, which I think really speaks to the credibility of what they're doing. And the company's already moved their project along pretty far. They're at the point where they've recently put out a pre-feasibility study with a $2 billion plus after-tax net present value at 8%. So I think it's a pretty interesting story. All right, everybody, enjoy the interview. Martin, thanks so much for joining us today.
Thanks for having us on, Steve. Really appreciate it.
So it's your first time on here, and I have to ask, you run a nickel company. When you wake up in the morning and you're getting out of bed and you're trying to get excited about what you do, I'm sure the idea of the nickel opportunity is something you're thinking about. What's your thesis when it comes to the future of nickel?
Yeah, I mean, nickel really is at a fascinating point in its history. It really sits at the intersection of two very important themes that are relevant to every person in our society. One is the transition to a low carbon green economy where electric vehicles and other forms of battery storage figure prominently, both from an environmental and an economic standpoint. You need a lot of nickel to make high performance, long range EV batteries. So the demand for nickel, that story of demand for nickel going forward is, I think, very obvious. The second theme that's also tied to it is the kind of geopolitical security theme. You know, about 3/4 of the global nickel supply is currently controlled by China and Russia. So as we as a society look to electrify and move to that low carbon economy, we're really colliding against the geopolitical reliance that we all have on China and Russia for a lot of the nickel that's produced globally, and needing to think about how we diversify that away to friendlier sources. So it's a super exciting time in the nickel business.
That's interesting. I've never thought about how much China and Russia controls of nickel before. One of the things that I've heard before when it comes to nickel is this idea that if the price of nickel gets too high, it can be replaced by other metals. How much of a concern do you think that is for long-term nickel bulls?
I don't think it should be viewed as a concern. I think it's something that actually sets up the sort of the guardrails so that you don't have this extreme sort of boom bust that you might have in other things. For example, cobalt, where we saw a sort of very parabolic price move in recent years, and that was great for a little while. But then what happened is you started to have a lot of new artisanal mining flood the market with new supply, and you also had a fundamental shift away from cobalt in the battery chemistry. With nickel, nickel's kind of in a sweet spot where it has exposure from two main demand drivers. The traditional driver is stainless steel, and the new driver to augment that is the EV batteries. So you're always going to see evolving battery chemistries here, and more or less nickel used in different chemistries is absolutely a reality. But the backstop for demand for nickel is always that stainless steel market. You need nickel to make stainless steel. You cannot make stainless steel without nickel, or the high performance stainless steel without nickel. And so you may, with nickel, have less exposure to parabolic upside, but you also have a lot more stability and predictability in where the nickel price is going to be now and going forward.
Now, I'm sure you've looked at a lot of nickel projects over the last few years, and pretty much most of our audience is retail investors. I'm curious if you have sort of any advice for them, or if there's any sort of risks that you think that they should look at when they're looking at some of these various nickel juniors that exist out there. So perhaps some of the things that sort of get overlooked when you're a retail investor just sort of looking at junior nickel projects.
Yeah, there's a lot of focus in the junior mining market on grade, and companies can kind of sometimes tag in with drill results into some flashy high grade material, and that's certainly true in nickel. Oftentimes, it's over narrow widths, very small slices of high grade material, and oftentimes quite deep underground. I think at the end of the day, retail investors have to think about these junior mining companies as we're sort of R&D type startups in a sense, and you're looking to bank on those companies that you think have what it takes to develop assets that are ultimately going to be acquired by major mining companies. So then you need to think about, well, what are the criteria for major mining companies of the types of assets they want to acquire? There's a few really significant criteria there. One is it needs to be a low cost, high margin asset. Two, it has to have the scale to move the needle, right? A small project or a small mine is not of interest to a major mining company. Three, it needs to be in a feasible, sort of safe jurisdiction. And fourth, it also needs to be able to produce nickel with a low carbon footprint. So you need low cost, you need scale, you need a reasonable jurisdiction, and you need a low carbon footprint. Those are the four criteria I would look at and in evaluating any kind of nickel project out there.
So that's excellent, actionable advice, I think. Let's turn the discussion to FPX Nickel. It's, again, your first time on here. We met at the Beaver Creek Precious Metals Summit, and I thought that this was a really interesting name. Can you provide us with a high-level overview of the company?
Yeah, happy to do that. So FPX is a Vancouver-based company. We trade on the TSX Venture Exchange in Canada and on the OTCQB in the United States. Current market capitalization around 130 million Canadian, and with a high degree of insider ownership, around 17% of issued and outstanding shares held by management, and a healthy treasury, around $30 million in the bank, so fully funded into 2025. We are advancing one of the world's largest and, in our view, most attractive undeveloped nickel deposits. It's called Baptiste. It's located in central British Columbia. We've just completed a preliminary feasibility study that pegs the net present value of the project at over $2 billion US on an after-tax basis. And that's all on the basis of a modest nickel price assumption at $8.75 a pound, which is well below where it's been trading in recent years. So a very robust project, a very large project, and one that meets all those criteria that I just talked about, where we're very squarely on the radar of potential acquirers among the major mining companies.
So let's talk about the mineralization. Something that I think caught our eye when we first saw it is that it's not the standard nickel sulfide we see, but it's something that's called awaruite. And I think I'm pronouncing that correctly. For someone who's not a geo, maybe you can walk us through what the differences are and sort of what this means from a sort of commercializing or making it ready to be battery grade, what that kind of looks like.
Yeah, for sure. So the nickel mining currently either comes from sulfide deposits, as you mentioned, in places like Russia and Canada, or from laterite deposits in places like Indonesia. This is a new style of nickel mineralization. The mineral is called awaruite. So good try there, Steve. You almost got it. And it's relatively similar to nickel sulfide, but the main difference is that there's no sulfur present in the mineral itself, and very little sulfur in the background host rock. What that allows us to do is this mineral is highly magnetic. So while you typically have to use very chemically intensive processes to extract a sulfide mineral from the background rock, here we can actually use large industrial magnets to recover the nickel, and then have very small flotation thereafter to produce a very high grade concentrate. So that magnetic characteristic is really the key distinctive property of this type of nickel. We are on the front lines of doing something new here. There are occurrences of awaruite around the world. This is the first awaruite dominant nickel deposit. And we have the opportunity to show the market that this can be a really innovative, disruptive, low cost new form of nickel production.
So FPX in September published results on the pre-feasibility study you mentioned. NPV 8%, $2 billion after-tax figure. What can you tell us about the pre-feasibility study? What do you think sort of speaks to its quality?
Yeah, first of all, it represents the culmination of a significant amount of engineering work, as well as field work, right? A pre-feasibility study is a fairly mature engineering document, and represents, and most importantly, I think, in terms of the metallurgical de-risking of this pilot scale demonstration. So that's where you're going from small scale lab testing of your process flow sheet to a scale that is getting closer to approximating a commercial operation. So really showing a really highly de-risked project. That simple flow sheet really provides for the production of that very high grade concentrate. That concentrate then, very importantly, because it's very clean and high in nickel content, can bypass smelting and go directly into the end use, either to be sold directly to stainless steel companies or directly into the EV battery supply chain. So by taking out that smelter middleman, we can get paid a lot more for the nickel that we would produce at the mine gate here, and that lends itself to those very, very robust economics that you mentioned. You know, this is a project that at the base case nickel price assumption of $875 per pound could generate free cash flow of almost $600 million US per year for 29 years. So it's very high margin, low cost, and it really meets that scale and that mine life requirement that the major companies are looking for.
So, congratulations on this one. We actually covered this story over on our site, the deep dive. You guys just signed an MOU with Toyota and Panasonic. What can you tell us in terms of the terms and sort of what this means for shareholders?
Yeah, so one of the really gratifying things for us over the last 12 months as a company is we've gotten a lot of, endorsement and validation of the project from major industrial players. So earlier this year, we took on an equity investment from Outokumpu. That is a European company. It's the largest non-Chinese stainless steel company in the world. So a very sophisticated buyer of nickel took an equity position in us, and they did so at a 40% premium to the market price of the stock. So really great validation from a sophisticated counterparty. This new MOU with a company called Prime Planet Energy and Solutions. So PPES is a joint venture company of Toyota and Panasonic for making batteries for Toyota Motor Company. It again represents a very strong validation from a sophisticated player in the EV battery supply chain that our project and the product that we would produce would be ideal for that supply chain. It is very typical for Japanese groups to proceed first with a non-binding MOU of this type, or memorandum of understanding, as the precursor or as the first step towards a commercial agreement that would involve some form of investment floating upstream to us from PPES in return for some other strategic collaboration, including potentially, offtake of nickel to their benefit. So it's been a very great relationship so far with PPES, and we think this MOU is just the first step to establishing a much longer term commercial set of arrangements with them.
So obviously, we're talking about junior mining here, and I think any shareholder should be asking this question. What color can you give us on the cap table and the current investor base?
Yeah, for sure. So we have fully diluted about 293 million shares issued and outstanding, but sorry, on a fully diluted basis, issued and outstanding is closer to 274 million. We have about $30 million in cash, and as I mentioned earlier, we're fully funded well into 2025. In terms of the ownership, about 17% of the company's issued and outstanding stock is owned by the board and management. So that's a very high and healthy number. We also have two strategic investors, each of whom own 9.9% of us. The first is Outokumpu, as I mentioned earlier, who came in at that premium to market earlier this year. We also have an unnamed strategic investor who also owns 9.9%, just below the reporting threshold for insider ownership in Canada. And this is a large public company, but we haven't been in a position yet to disclose their identity, though that obviously is a question that we get almost every day for people trying to figure out who that interested strategic corporate entity might be. And something that we have to kind of tap dance around now, tap dance around for the time being.
Last question for you. Are there any milestones or timelines that investors or potential investors should be watching over the remainder of the year?
We'll have further news on the work that we're doing on carbon sequestration. This is taking advantage of the particular characteristics of our host rock to actually sequester CO2 as part of the process of extracting nickel. And we'll also have further report on a larger scale up piloting of our metallurgical program. That's a program that's being co-funded by the federal government of Canada under their critical mineral strategy. So very happy to be working with Government of Canada on scaling up that test work. And as we roll into 2024, one of the next major milestones for us would be entry into the environmental impact assessment process. So really that first step of permitting of a major project here in Canada. And we're looking forward to working closely with government and with our Indigenous partners to move into that process and to set ourselves on the road to being fully permitted in the years to come.
Well, Martin, thanks so much for hopping on here. I think you guys got a really interesting company here, and I love the nickel space. And I wish you guys the best of luck as you continue to roll forward. And hopefully you'll continue to come on here in the future and update us as the story continues to evolve.
Thanks a lot, Steve. Appreciate it.
All right, everybody. Thank you for watching. If you could do me a big favor, please smash that like button, subscribe, or ring that notification bell. Also, let us know what you think in the comment section. All right. Thanks, everybody.